The moment we've all been waiting for. Okay, well, maybe we haven't all been waiting for this, but we've kind of been excited for Tesla to announce a stock split. Apple just announced they were doing a stock split, so Tesla joined the crew, and now they're also doing a stock split on the same day that Apple is doing it. Maybe Amazon is next. Nothing's impossible this year, right? Welcome back to the channel. I'm Jacob Fisher, and today we're talking about the Tesla stock split that happens to be on the same day as the Apple stock split. You can check my video on that up there. But we're going to talk about whether or not Tesla is a worthwhile investment before or after the stock split. Let's give that like button a little tap and get into it. First of all, with the facts, you will receive extra shares of Tesla on August 28th, with the actual price adjusted day being on August 31st. That's the day we're going to trade at the new price. Tesla is sitting around $1,500 a share right now, and they're doing a 5-to-1 stock split, which means the price, if they were continuing to trade at $1,500 a share, would go to $300 a share. It also means that if you own 1 share of Tesla pre-split, now you will own 5 shares post-split. It's just some simple math. It's a 5-to-1 stock split, so 1,500 divided by 5 is 300, and then 1 share to 5 shares. The other question we really need to talk about is, should you buy Tesla pre or post split? Both are really good options to buy pre or post split, but the issue of Tesla is that I don't think it's personally worth $1,500 a share right now. I think it's worth more around the $1,200 range. By the end of the year, Tesla should be worth $1,500, but at this point in time, I just see it more at the $1,200 range, and that's what I would rather pay for it than $1,500 a share. The split adjusted price for me that I'd be comfortable getting in Tesla, very comfortable, is around $240. That's just, $1,200 divided by 5. I think that sounds very reasonable for a share, considering their market cap right now sitting around the $1,500. Well, actually, they're $1,600 a share right now. That's wild. But their market cap right now is sitting around $250 billion, when compared to Toyota, they have a $217 billion market cap. That's Toyota that has 217, while Tesla is 256. That doesn't make too much sense to me, considering the amount of cars that Tesla sells compared to Toyota. I mean, Toyota has been around for a while too. We don't necessarily know what Tesla's going to do. All that being said, I think Tesla is a great company. They have incredibly innovative products, an entirely electric car, plus semi-trucks, plus sports cars, plus shorts, and they actually have it in the market. Unlike Nikola, for example, we're still kind of waiting on for them to get an electric car that people can buy. You could just go to the store and buy a Tesla right now. Tesla does have 4 cars for sale right now: the S, the 3, the X, and the Y. All of them have been performing great, and people love their Teslas. Of course, there's some production issues, but for the most part, people love their cars. They had quite the spike a few weeks ago from pre-earnings. If you want to watch my options video on that, how to play earnings, check that out. But they spiked from earnings and previously before earnings, and they went all the way up to like $1,800 a share, and that was pretty cool, seeing my position up 100% a share, because I own a fractional shares at 925, and by fractional I mean 0.02 shares. I do think Tesla is a great company, and I was very lucky to get in at that 925 a share before it skyrocketed again. Now, I wish I had bought more, or at least some, when it was around 200 a share, or 300, because that was just a great price for this stock. We are going back to 200 a share, which kind of skews the image of Tesla. It was a buy at 200 a share a long time ago, but that price, according to the split, was actually $40 a share, and I don't necessarily think we're going to go back to that price. I think Tesla will continue to announce good news and build an even more reliable product base in the coming years. Now, I'd probably buy a Tesla if I didn't live where I'd have to park it on the street, or if I should buy a car right now, which I shouldn't. So I'm a bit hesitant to add more fractional shares to my portfolio right now, because Tesla is just so high, and I don't really think it deserves a valuation. Even Elon Musk himself said it doesn't deserve the valuation. He said the price is too high. Now, we was talking about that when it was higher. I don't know if he means it right now, but still. If you want to see some technical support lines for Tesla, that's around $13.50. I will have to see what it is, adjusted split price, but that's where it is right now for some support. Had they not announced the split because they were going down prior to announcing the split, they'd probably be sitting under that $13.50 or around the $13.50 mark, maybe even to the $1,200 mark, where it'd be a great time to get some shares, for me at least. That's just my thought process, and of course, this changes things a bit. It makes me want to get more money into Tesla, but I'm gonna hold off for now. Now, the other thing we need to think about with splits, I mentioned the Apple video, is that retail investors are making up a larger part of the market than previously. So you have a lot more retail investors having a lot more buying power to buy stocks in the stock market. Then we have to look at all the people who love and hate Tesla. I mean, a lot of people love it, some people hate it, and they have a very high short interest from the people that hate it. Using shortsqueeze.com, you can actually see the number of shares shorted and the amount relative to the float. Right now, 12 million shares of Tesla are shorted, which makes up 8.5% of the float. That's a very high number, and if you want to compare it against Apple, for example, they have less than 1% of their float shorted. That's, again, due to people hating on Tesla and wanting it to go bankrupt because they just don't believe in the company, they don't like Elon, they don't like the business model, or just how Tesla has been going about their business. But they do have a very innovative product that has changed the entire landscape of the automotive world. I'll probably pick up a few more fractional shares myself, but I don't see myself adding bigger positions until we get to that 1200 level or 240 post-split level, because that's the price I think it's worth right now. End of the year, if it's still the same level, I may pick up more shares. Let me know down in the comments what you think of Tesla and if it's overvalued, undervalued. Do you have shares? I want to hear your thoughts on that. I upload videos on Monday, Wednesday, and Friday on travel and finance. If that sounds like something of interest to you, make sure you subscribe down below. Thank you so much for watching, and until next time.